Let's explain then limited company buy-to-let mortgages. We'll take a look at structure, costs and criteria. Buying through a limited company is increasingly common amongst landlords. However, the mortgage process differs slightly from purchasing in your personal names. Now, what we're not going to discuss in this video is things like tax. We're not qualified, so if that's what you're looking for, this is not the video for you. However, from a mortgage point of view, understanding the structure and assessment around the process is essential. So what is a limited company buy-to-let? The property is effectively owned by the limited company. The mortgage is issued to the company. The directors usually still provide a personal guarantee. So although the lender is lending to a company, they're still going to assess you, your incomes, your credit commitments, your suitability as a borrower, because your personal guarantee is typically going to be on the line. So why might some investors use this limited company structure? Well, common considerations include tax planning. They take into account retained profits, portfolio structuring, perhaps inheritance tax planning and future planning. Independent tax advice should always be sought separately. And again, that's not something we're qualified to do, but once you've got that sound advice, we can help implement the limited company mortgage. So when we're looking at lender assessment, lenders are typically going to review rental coverage calculations, as you might expect with a personal mortgage, although there might be some more generous allowances there. They're going to look at the structure of the company and understand that. They're going to look at your background as a director and understand that. And as we said, it's going to require that personal guarantee. Most will require the limited company to be set up as an SPV, a special purpose vehicle. That basically means the property has been set up with the purpose of working in property. Some costs to consider. As with any mortgage, there's going to be potential arrangement fees, legal costs. You're also then going to have your company setup costs and ongoing accountancy fees as well. So getting that full comparison, that full understanding and the proper tax planning advice in advance, making sure this is the way you want to invest, is going to be really important. So key takeaways then when we're thinking about limited company buy-to-let mortgages, it's going to be the company who owns the property, but you as the director are still going to be assessed and you're going to provide that guarantee on the borrowing, usually. The criteria is going to differ slightly from personal buy-to-let, as might the affordability calculations slightly. And it's always really, really important to get that specialist tax advice up front, and it's separate to mortgage advice. If you want to learn a little bit more, download our limited company buy-to-let checklist below.